Hello and welcome to our next Finway webinar. My name is Jennifer. I'm one of the co-founders of Finway, and maybe also just shortly, one sentence, what we do at Finway. We provide a software for small and medium-sized businesses, which allows them to basically digitalize and automate their entire accounts payable processes, from purchase invoice approvals over to also the entire pre-accounting, budget tracking, but then also certain payment workflows. But that's not what we have as a topic today. Today we have our guest Veronika von Heise-Rotenburg here. Welcome, Veronika. She is CFO and Managing Director of Everphone, which is a B2B device as a service company. But she's also a speaker on risk management, on digital finance and finance transformation, which is also a certain topic which we are addressing today. She is basically able to manage, especially the transition from startup to scale up, and there it becomes even more important to also have the right measures to track. And today we're going to talk about exactly this one, about the importance of objective and key results, as well as KPIs, which are not only important for the entire company, but also specifically for finance teams. And yeah, really happy to have you here as our speaker, Veronika. Welcome.
Thanks for the warm welcome, and excited to talk about one of the topics that is close to my heart.
And for all the participants, I have a couple of questions to Veronika, but if you also have some, please feel free to send them here in the chat function, and we will try to address them either during the webinar or at the end. So feel free to ask anything you want to know from her. But Veronika, we have a lot to cover today, so let's also dive right into the topic and start looking at, first of all, the big picture. We often hear about objective and key results being used in various departments across the organization. However, like daily business and finance teams does not leave too much room for their very own OKRs. So my question would be, why is it so important to create such for the finance team?
So I believe on the one hand, all hands on deck, no one should be left out. So if the whole company is running on OKRs, and if especially tech teams get their OKRs, work with OKRs, are proud to present whichever percentage they have reached by the end of the quarter or end of the OKR cycle, then the finance team shouldn't be left out. On the other hand, I believe it's very motivating to a team and to each and every employee to have additional goals than just keep the system running. Every one of the accounts payable clerks, every one of the monthly closing people, they know that they have specific cycles and specific tasks to fulfill. But creating alignment with the company contributing to a greater goal is something that motivates them, that encourages them to think outside the box, and also keeps them happily working, in our case for everphone. So I believe it's creating a common sense of duty and purpose, and they create transparency what the organization as a whole and the finance team is contributing to the success outside of the ordinary.
Yeah, I think very important. Lastly, we also took a survey on LinkedIn, and we were asking about the biggest challenges regarding OKRs, and actually 86% said that they struggle with setting up meaningful objectives. So in your experience, what are like some common challenges or also obstacles that the finance team may encounter when they are implementing OKRs?
So I don't exactly know what people would understand by choosing the word meaningful. Meaningful would, of course, mean that they have to contribute to the organization as a whole. But to me, it would also mean that they are reachable. And that is indeed a challenge by the finance team, because most of our employees are fully clocked by day-to-day work. So they're having around 10 to 15% of their daily or weekly work time available to work on OKRs, whereas tech teams can work like 80 or 90% of their work time on fulfilling a specific OKR. So our OKRs need to be in smaller steps or in digestible steps in comparison to the overall company OKRs. Another factor is that for the fulfillment of many of the company OKRs, finance is needed to some extent. Working on other teams' OKRs, again, subtracts some time from working on our own. And at last, the way OKRs are set up, they should be stretch goals. They should be clearly measurable. And I feel that especially within finance, legal, maybe people and culture teams, it's oftentimes a black or white decision. So we either have done our monthly closing on the 10th or we haven't. We either have gotten fully audited results or we haven't. We have closed the equity round or we haven't. And it's not like we have 73% closed the equity round and that's a good thing. No, that's not how finance OKRs, legal OKRs can work, unfortunately. Oftentimes it's just a yes or no decision. And that's contrary to the framework that might also be difficult to understand in the collaboration with other teams who do, let's say, the pure theoretical OKR work.
So we're also going to talk about some concrete examples later on, and I think also both in OKRs but also in KPIs, you also have a couple of examples which may not only be black and white, but I also fully understand that, as you said, in those teams, it is quite challenging to really have such increasing numbers, but rather have it done or have it not done. Maybe let's talk a bit about also about the process. I think you have quite extensive experience as a CFO, and I think it would be also very helpful if you could step by step explain the process on how to find the right OKRs for finance teams, and maybe also share like a success story or, as I said, concrete examples on how objectives were then also helpful for your own team at everphone.
Yeah. To me, the biggest success story is actually employee feedback. In our half-year company feedback survey, we always ask people whether they felt aligned with the company vision, mission, and goals, and whether everyone understood what they contributed to the overall goals. And in the finance team, that percentage was very low in the past, and it stepped up by reaching kind of 80%. With people explicitly citing OKRs in the comments. So what it has done for our team, besides getting things done and getting recognition for fulfilling extra work, was just aligning the team with the company again. And that's a great result for, let's say, a relatively small workload on our finance legal leadership team. What did we do? We have company OKRs, which are usually set once a year. They're very broad ones, like create the best device as a service experience on the market. That is encompassing pretty much everything from getting a rockstar employee portal to having clean invoices, to having, let's say, a buyout version for the devices for employees who want to do so. Under those, we usually word department OKRs. And mine were very simple. It was, on the one hand, protect back. So do everything that might be harmful for the company on a data protection side, on a tax side, on a compliance side, on a policy side. Just do that boring stuff. It was build muscle, thingy close to my heart as I'm also doing a lot of sports. So preparing everphone again for hypergrowth, setting up all the systems we need in order to succeed with double the amounts of devices while having the same team still. And so each concrete OKR would have to fit under the company OKRs and would fit under the finance team OKRs. And then we strive to have one OKR for every sub-team or for every employee that's on the team. So the solvency team is very small. It's one FTE that's working 15 hours a week. But she has one OKR. And of course, the workload she can put in is like 1 hour per week, but it will be 15 hours by the end of the quarter. And that means it needs to be something that she can fulfill. And it was, for example, have a renewed solvency reporting, have all data cleared, and get additional information in a digital fashion. And now it's up on her to decide, Are we still using Kreditreform? Can I do an Excel upload to our backend system, or shall I ask the tech team to create an API? It's on her on how she fulfills that, but it's clear that she has to update the data, and she doesn't need to type them in, but needs to get help to get it done. But also, for example, on accounts payable, we measure the efficiency they've created by digitizing some of their work steps, such as accounts payable transaction per FTE working in that team. Or we measured how we could speed up the direct debit run. In the past, we did that on a 20th of the month, just because we couldn't do it differently, and we lacked 20 days of cash in. Now we're doing it on a 3rd days of the month, and so we saved 17 days of cash in. That's something you steadily see the number of days declining, and you see that each of the little factors the team introduces is helping along to reach that goal. So those would be objectives that we set in the last few months, and that we also are proud to have completed.
Super interesting. Thanks for sharing those examples also. And I think in the end, they also pay into the operational tasks then again, and also helping to make them smoother for the employee. And also super interesting that you have especially OKRs like on an employee level at a certain point, because this way really everybody kind of is included in there. Also really interesting thought. As we also transition now from like OKRs to KPIs, could you also explain the role of KPIs in measuring, but also then tracking the financial performance of a company, and how they also differ from OKRs in terms of their purpose and in terms of their implementation?
So as said, OKRs are a method, and that method comprises of setting goals and measuring completion of the goal over time. Once the goal has been reached or nearly reached, the OKR is out, and that's it. KPIs, on the contrary, are quantitative measurements to track a specific progress or performance. And that means generally, if you have set up a KPI in your business model, that KPI is here to stay and can be measured over time and compared over time. But it would be very unusual if you've chosen a KPI, if it's a sensible one, if everyone understands it well, to let go of that KPI unless you changed your business model significantly. KPIs can be interlinked to OKRs. Specifically, they can be the key results in the OKR framework if they are specific enough and if they are indicators for success or progress. So what I just mentioned, the day of the completion of the direct debit run, that's something I want to track as a finance team leader, because it's something that is vital to the cash performance of the company. If we have a specific OKR that's saying improve cash in, then the days until the direct debit run are effectuated might be one of the key results, one of the KPIs that I can use in order to determine have we been successful in what we do or haven't we.
Yeah, super interesting. And you already mentioned kind of like one example now, but which KPIs should finance track, and are there maybe certain areas that make sense? One of them might be now topic around working capital and liquidity and cash, but maybe there are also others, or I believe there are also others.
So I guess in accounting, there is a vast number of, let's say, balance sheet and profit and loss KPIs, usually dividing one thing by the other. Days of sales outstanding, the quick ratio, the current ratio. You can track them all. There are neat cheat sheets which you can set up, and then you have all those KPIs. I believe, especially for accounting, the most important is to kind of funnel it down and concentrate on the 3 KPIs or 5 KPIs that are most interesting to the business. And that's the ones you will report to investors or will report to your CEO. You can, of course, look to others as well, but I wouldn't say present like 21 KPIs and expect everyone to understand them. if finance is on track, if everything's running smoothly, I'd probably say 1 for cash, 1 for profitability, and 1 for efficiency, and that's it. Same goes for collections. If everything runs smoothly, that should be okay. Otherwise, I'd be looking for days of sales outstanding, maybe for a cash conversion circle, maybe also for a percentage of refunds of previous month revenues, if that is a thing in your business model. Efficiency measures could be how correct is your monthly statement, or how correct are your annual accounts, how much of different balance sheet positions do you have to correct. It could be time to monthly closing, time to annual closing. It could be debt outstanding. It could be bad debt if collections is a thing. I believe that's pretty much dependent on the business model. But my understanding was Finway is also supporting companies in measuring especially expense management KPIs, don't you?
Yeah, for sure. So basically using Finway allows you to automate certain things, but with automation, you also have less errors and most likely also less administrative work. So what we see, for example, when looking into our customer base and asking them how kind of their work is improving through Finway, is that first of all, approval workflows help a lot, but then also the entire payment processing, which goes through our software, it kind of, like as a general fact, allows you to just manage your spendings generally like around 30% faster. But then also, especially at the payment run, it's more reliable. And some even say it's like, it goes up to 100% reliability now, because you can ensure that everything's getting paid on time, and there's like no independence, or there is an independence from external partners, being it, for example, tax advisors. But then also like looking at the accounting itself, and especially like the pre-accounting, which also happens in Finway, which can also be automated in a certain way. We also see here that the correctness just increases massively. And some even say also here they have like 100% correct accounts, account selections before the data goes to the tax advisor or to the external accountant. So those are like a couple of improvements we see. Since we also got a question now from the audience, which fits in here, I would quickly ask this one, because somebody asked, how frequently should we review and analyze financial KPIs to identify trends and make data-driven decisions?
Well, it kind of depends on the KPI, doesn't it? So let's say you're a fast-moving consumer goods business. I believe it makes sense to look at your daily or at least weekly sales, because that's translating into revenue. If you are a B2B business, as Everphone is, and have your invoicing run once a month, well, I can look daily, I can look monthly. The result will be the same. No invoicing run, nothing billed, no revenue. If you're having, let's say, daily payments of your customers, typically in B2C businesses, you will need to know how quickly are customers paying. Is there any debt problem, bad debt problem, because customers are drawing back their direct debits or are drawing back their PayPal payments. If you're doing B2B, that's usually not the issue, but you'd rather want to have a solvency check, and you want to monitor your biggest accounts for cluster risk, and you want to monitor their payment behavior, which is a whole different set of analysis, takes a lot of time, but it tells you, the payment quality of my 5th biggest customer is declining. They're paying, let's say, 2 days later every month, and it's now about time I have a very honest conversation with them. So I'd say it depends on the business. The smaller you are, I'd say, especially in a, let's say, seed, Series A stage, the more often you would want to look at KPIs, and I guess the more fragmented the KPIs could be. The bigger you get, the more of the KPIs will end up in finance, translating into revenue, translating into cost anyway. So at the point in time where, let's say, the system is more stable and the waves of business don't fully hit finance each time, you would probably be good to look at weekly, bi-weekly, monthly KPIs.
Thank you. I hope that provided a helpful answer. We've talked now a lot about KPIs, especially for the finance departments, being also like very driven to their operational tasks. But which company-wide KPIs do not originate within the finance department, but they are also tracked by them in the end? Because this kind of also results in certain additional responsibilities, I believe, right?
So it depends a bit on how your company setup is. For us at Everphone, we also own the data department, which is ending up each KPI that someone wants to measure needs to be tracked by either our analytics department or by our controlling department, because those have the numbers. Some of them are easy to determine, like let's do a dashboard, set it up one time, and then the operational department can themselves check what happened. That would be typical for shippings on our end or for sourcing prices. Once the invoice is in, once we have fully processed the invoice, they can get transparency on the sourcing prices. So there is a dashboard existing. The process is documented by day XYZ of the invoices and the shipments arrival. We will have fully consolidated it. It will be in our systems, and then it can be reported in the dashboard. That's it. For others, it's rather like someone is making an ad hoc request. Listen, I have the feeling my team is not performing. Can we measure that? In comparison to FTE, in comparison to shippings, in comparison to customer complaints handled, are we getting better or are we not? Can we afford to hire another resource, or shall we rather invest 30K to get, let's say, our Salesforce or a HubSpot, another module that's making us more efficient? And that's basically an answer a finance business partner can provide, because they have the numbers, such as how did efficiency develop over time. They need to collaborate, of course, with people in culture or HR ops, but then they can create efficiency measures, and they can basically validate it, and they can make the decision between investing in further efficiency, investing in further manpower, or just keeping everything running as is, because maybe it's not important and it's not paying into the company OKRs right now. And if a word of warning is okay in that regard, I love if departments make data-driven decisions. What I love even more, if they approach us with their suggestion, let us have the data and let us look over it. Because oftentimes they kind of collect data someplace. The data are either not validated, or they are not concrete enough, or it's the wrong selection of data. And obviously shit in, shit out. So if you make a database decision and the data is wrong, the decision will very, very likely be wrong. So that's something our finance business partners work out with the departments.
Okay, thank you. That's very helpful. Maybe before we end up, also another question coming from the audience. They want to go back a bit to defining. How can we set challenging but yet also achievable targets for financial KPIs and OKRs without compromising employee motivation or morale?
Can't give you any hard advice there. So on the one hand, the problem is persistent, that you will have a black or white decision. It's done or it's not done, and that might be demotivating to people, because they've done so much. They've completed 95% and still the OKR is not reached. So I guess that could be smoothed over by communication, by explicitly applauding them for having almost fulfilled the OKR. And I usually drag the OKR to the next quarter. Doesn't make sense from a conceptual perspective, but then this team has not 3 OKRs, but 4, and the one is almost fulfilled and will be fulfilled at the first review. So maybe that's keeping people motivated to do the very last step to completion. On the other hand, you as a lead should have a gut feeling of how much spare time people have and how much they could potentially achieve in that period. I believe in the beginning, I set very big OKRs, such as implement an ERP. Obviously, that's nothing you can do within 3 months. So now, having onboarded everphone, my first was document processes in a way that we can use those documented processes to do an RFQ for a new ERP. Second quarter was have the RFQ for an ERP, which means writing to like 20 something ERP providers. Next quarter was select a short list of 5 ERP providers and have presentations with them. And now we're doing implementation, which is negotiate a contract, start implementation. Next quarter will be maybe training, and it will be finally go live, and it will be migration. So over the quarter, we build it by very, very small steps that are really achievable for the teams. Otherwise, I believe everyone knows that SMART framework for goals should be small steps, they should be measurable, they should be reachable. Revisiting that framework might be helpful to set your goals, and also maybe get into communication with your teams, because most of them will have smart suggestions for OKRs they want to do that are helpful to the company and also sound reachable to themselves. So it should be rather a system that evolves and a system that is born by the people working on it, instead of being something that leadership pushes downward into the organization.
Yeah. So you basically say if you have a really big objective, you want to you kind of break it down to like quarterly achievable objectives, so that that's also manageable. And I'm also fully like with your your last part, that it's a lot about kind of getting the entire team united, talk together, and get their insights, what they think about it. And in the end, if they are also kind of setting up the OKRs by themselves, then with certain advice from leadership, I think that also helps again with the motivation and the moral behind that. And
I hope it does. And as said, only positive experience on our end. We were really happy with implementing the system, and I hope others will have the same experience once they do it.
Well, thank you, Veronika, for those great insights. I think it became clear that modern finance departments play a crucial role for driving growth and also innovation. What comes up with that? Maybe let's sum it up. How would you say can the implementation of OKRs and KPIs really empower the finance professionals to become a strategic partner in their organization?
You know, there's that saying, one team, one dream. That's a very startup-y thingy, but it can align front office, which is sales, which is operations, and back office, which is finance, to work together for the success of the company. And that's most of the marvelous things that such a, let's say, goal setting and management system can achieve for a company.
Thank you very much. I just also got the feedback from the audience. Thank you very much for your open words on this topic. I hope everybody got a couple of insights, a couple of thoughts, maybe also those concrete examples were helpful for your next OKR session. Thanks, Veronika, for being here today and sharing all of this with us. Thanks for everybody who listened. And by that, we're already at the end of the webinar. And I can just wish you a good rest of your afternoon.
Have a good one, everyone. See you around. And if questions come up, please ping me.
Thank you. Bye.
Bye-bye.